If you are a 1099 contractor and you have been told you do not qualify for a mortgage, I want you to stop and watch this video before you give up. Because here's the truth, you can get a mortgage. You just need to be working with a lender who actually knows how to qualify you. I'm Toni Gozza, Senior Loan Originator at Interconnect Mortgage in Palm Beach Gardens, Florida. My NMLS number is 274323 and my company NMLS is 1720882. I've been doing this for over 30 years and I specialize in exactly this situation. Borrowers who do not fit the traditional box but absolutely have the income and the ability to buy a home. Today I'm going to break down why traditional lenders keep saying no to 1099 contractors, what loan programs actually work for the way you earn, and what you need to do to get started. Let's get into this. Here's the core issue. Traditional lenders, your big banks, your conventional loan programs, they use tax returns to verify your income. For a W-2 employee, that works perfectly. The number on the W-2 is the number they use. Simple. But for a 1099 contractor, the math is entirely different. Let's say you gross $150,000 a year. After writing off your home office, your vehicle, your equipment, your travel, and all of your other legitimate business expenses, your taxable income on paper might show $60,000 or $70,000 a year. You're doing exactly what you're supposed to do as a business owner. You're being smart. But that conventional lender looks at that $60,000 number and says, you don't qualify for the home you want. That's the disconnect. Your real income and your documented income don't match, and most lenders only know how to work with documented income the traditional way. This is not a reflection of your ability to pay, it is a reflection of the lender not having the right tools. There are three main options that work well for 1099 contractors. Let me walk you through each one. The first is the 1099 only loan. This is exactly what it sounds like. Instead of using your tax returns, the lender uses your 1099 forms directly. Most programs look at 12 or 24 months of 1099s calculate your income from the gross amount, not the net after deductions. This is one of the cleanest solutions for contractors with strong gross earnings who show low taxable income. The second is the bank statement loan. Bank statement loans use 12 or 24 months of your personal or your business bank statements to calculate your income. The lender adds up your deposits, applies an expense ratio, and uses that figure as your monthly income. This works extremely well for contractors who deposit income consistently but whose tax returns do not tell the real story. It's one of the most popular programs that we work with at Interconnect Mortgage. And the third is the non-QM loan. Non-QM stands for non-qualified mortgage. These are loan programs that fall outside the standard Fannie-Freddie guidelines. They're fully legal, fully regulated, and widely used by creditworthy borrowers who simply have non-traditional income. Non-QM is the category that includes 1099 only programs, bank statement programs, and other alternatives. If you're a 1099 contractor, a non-QM loan is likely your path to approval. This is the part most people want to know, is how does it actually work? Well, it depends on the program. With the 1099 only program, the lender takes your gross 1099 income for 12 or 24 months and divides it by the number of months to get your monthly qualifying income. Some programs apply a small expense factor, others use the full gross amount. Either way, your deductions are not hurting you. With the bank statement program, the lender averages your monthly deposits over 12 to 24 months. For business accounts, they typically apply an expense ratio somewhere between 50 and 75%, depending on your industry. For personal accounts, most lenders will actually use 100% of the deposits. There's also a program called asset depletion. If you have significant liquid assets, savings, investments, retirement accounts, etc., some programs let lenders calculate a monthly income figure by dividing your total assets over a set number of months. This works really well for contractors who have built up real wealth but want to keep operating independently. The right calculation method depends entirely on your specific income profile. That's why it's worth having an actual conversation before you assume anything about what you qualify for. Let me clear this up because a lot of contractors assume the paperwork is going to be overwhelming. It's not. For a 1099 only loan, they typically only need 12 to 24 months of your 1099 forms. proof of contractor status such as a business license, client contracts, or a CPA letter, and 2 or 3 months of bank statements to confirm the income is being deposited, and your government-issued ID. For a bank statement loan, you need 12 to 24 months of personal or business bank statements, proof of self-employment, and your ID. If there are large or irregular deposits, you'll want to be ready to explain those. What you do not need is 2 years of tax returns. You do not need a W-2. That's the whole point of these programs. I have a free pre-approval checklist on my website that gives you a full breakdown of exactly what to gather before your strategy call. The link's in the description. Download it before you start pulling documents together so you're not running around looking for things that don't actually matter for your program. Let us give you a realistic picture of what most non-QM programs require. On credit score, most non-QM and bank statement programs require a minimum of 620 to 640. Some programs go as low as 580 with stronger compensating factors like a larger down payment or solid reserves. Higher scores absolutely get you better interest rates and lower down payment requirements. On the down payment, most non-QM programs for 1099 contractors require a minimum of 10%. Some go as low as 5% for borrowers with really strong credit profiles. If you can put down 20% or more, you're going to get a better rate and you won't need mortgage insurance. On reserves, most programs want to see 3 to 6 months of mortgage payments sitting in your accounts after closing. This is not money you lose, it just needs to be there. It shows the lender you can handle payment obligations even if income fluctuates month to month. And yes, non-QM loans do carry slightly higher interest rates than conventional loans, but that gap has narrowed a lot as this market has matured. And the bigger cost for most contractors is not the rate, it's sitting on the sidelines and watching prices and rates move while you wait for a conventional lender to say yes. Getting in right now in the right program and refinancing later when your income looks cleaner on paper is often the smarter financial move. Being a 1099 contractor does not mean you're stuck renting. It means you need to work with a lender who understands how you earn. At Interconnect Mortgage, we specialize in non-QM and bank statement loans for contractors, consultants, freelancers, and independent workers across Florida, Georgia, and South Carolina. If you're ready to find out what you qualify for, here is what to do next. Download the free pre-approval checklist. The link's in the description. It tells you exactly what documents to gather so you're ready before we talk. Then book a free 15-minute strategy call with me at Interconnect Mortgage. No problem, no pressure, no commitment. You're going to leave that call knowing where the programs are that are available to you, what your purchase range looks like, and exactly what your next steps are. I'm Toni Taylor at Interconnect Mortgage, and we look forward to talking with you. Links are below. Let's get you home.